All right. Good morning, everybody. I'm excited to have Steve from Navigation Trading, and we're going to talk about trading. And excited to have him on here. And I thought we'd start with a little bit on the journey. I'm always fascinated by different people on their journey, all walks of life. I've always enjoyed everybody's journey and what they did before. For some people, what they did before. I'm more in, it's for me always interesting professions. I met a guy who at a seminar one time, and I'm trying to seek the most interesting profession. And this guy had a warehouse next to San Diego Zoo, and he grew rats. And he basically sold rats to the San Diego Zoo. And he was kind of an interesting character. I guess you'd have to be. And he goes, sometimes there's an Italian restaurant down the street. Sometimes they'll call me and complain about rats. But I said, that to me was one of the more interesting occupations. I don't even know how you would describe that. But anyways, Steve, why don't you start out a little bit of your journey into the world of options trading?
Yeah, well, thanks for having me. I'm
Sure.
excited to do this as well.
Yeah.
Um, yeah, my journey may not be as fun and exciting as a rat guy, but I started I started trading right as I graduated from college. So this was late 99, early 2000, right in the heat of the dot-com internet bubble.
Yeah.
And I was not trading options at that time. I was only trading directionally using individual stocks and futures.
Yeah.
And my dad and his friend at the time were doing some futures trading, and the markets always just kind of fascinated me. So I tried to learn from my dad, but he's not a very good teacher, and I wasn't a very good student, and so
Yeah.
it just kind of clashed. And so I ended up calling his friend and saying, "Hey, can I come over and just learn what you're doing?" And so he taught me about futures. I sat at his house looking at charts, and he was showing me what he was doing with futures. And that was kind of the end. I mean, that was kind of the start.
Yeah.
That's where it all started. I got the trading bug, and I never, I quit. I quit a few different times throughout my trading journey.
Oh, sure. Yeah.
But and I called myself a trader, but really I was at that point I was really pretty much just a glorified gambler. You know, I
Oh, sure.
would I would have a five or $10,000 account, and I'd be trying to trade, the ES or the NQ. And if you can imagine, it's not too hard to blow an account when you're trading that kind of leverage in that small of account. So I didn't really understand leverage and position sizing and things like that. So I definitely blew a few accounts. I started to finally gravitate towards options. And in fact, I mentioned this to you. I think, you were one of the first people who I watched a course or some type of video or something from. I don't remember exactly what it was, but what I do remember specifically is thinking, this is just over my head. Like I didn't
Yeah.
understand the Greeks or
Yeah.
how that happened. I didn't
Sure.
understand the fact that you could buy a call and the stock could go up, but you still lost money. I didn't understand any of that. And so I kind of just gave up on it for a
Yeah.
couple years. But I kept coming back to it a little bit at a time. And by about 2006, yeah, it was a couple years before the financial crisis. So it was about 2006 is when I really kind of buckled down. I was like, all right, I'm going to figure this thing out, this options thing, because
Mm.
I know that there's something to it. And so I just kind of, dove in and learned it. And then from that point on, I was primarily focused on option trading from that point on. And just kind of still trying to figure things out, still not consistent. I'd make a bunch of money and then I'd lose a bunch of money. I'd make a bunch of
Yeah.
money and I'd lose a bunch of money.
Yeah.
And it wasn't until around 2009 is when I really started to kind of build a discipline and become consistently profitable. And a lot of that came from selling premium and delta neutral type strategies as opposed to being directional. And
Mm.
um and so that's and I wasn't day trading then anymore. I was more focused on 20, 30, 60, 90 days out in duration as far as the expirations go. So I was doing a lot of uh, iron condors, strangles, calendars, delta neutral type strategies and just
Yeah.
kind of layering those in and building a portfolio that way.
Nice.
And so that's kind of when I turned the corner on my consistency and more profitable.
Nice. Okay, so 2009, okay, you switched a little bit from speculative to range bound to stabilize the account and get things going a little bit. And then where did it go from there? 2009, did you just like the next 3, 4, 5 years stick with that?
I
And
did. Yeah. I was generating pretty consistent profits, anywhere from 40 to 100% type returns
sure,
each year.
great.
And I was talking, and so then where navigation trading came about, it was a Thanksgiving time, family was in town, and I was talking to my brother about, what I was doing and how profitable it was and things like that. And he's like, why don't you create courses and teach this?
Yeah,
And I was like, no, I don't have any interest in doing that. I don't know anything about how to do that. And he owns a video production company. And so he was like, well, you just, I'll set you up with the software. You just hit record. I'll edit the videos. I'll do everything. And so
oh,
so
geez,
basically I
nice.
put together kind of an options basics course and then an iron condor course. And we put it on udemy.com, which is a big platform that you can take courses on anything from
Yeah,
trading to computer programming to yoga to, I mean, anything.
wow.
And so we put it on Udemy and started getting people signing up like very quickly and
Mm,
like in the hundreds of people signing up. And I was like, wow, there's definitely a thirst for this. People want this. And so then I created a calendar course, then I did a butterfly course and just all the
yeah,
stuff that I was trading. And then I started getting requests like, do you post your trades or can you send out your trades? And so that's kind of when navigation trading was born. And
neat.
we created our membership and it just has kind of organically grown from there.
I had the pleasure of talking with you, I think last week or week before, to uh, uh, was introduced to you by Troy at Option Omega, and you told a little bit about your trading. How would you give an evolution of, here you're early 2000s, 2010, you're doing a lot of these positive theta. We didn't have 0 day, we didn't have weekly.
Yeah.
So you're trading more 30-day, 20-day, 40-day positive theta, and obviously managing them well. Take me through the progression of, let's see, kind of take me through this trading progression. I find it very interesting. You kind of told me what you're focusing on more in today, right? And I always look at trading as evolving. I mentioned to you before, I'm fascinated by learning some of the shorter term stuff now you want to always improve. Take me from the evolution of this longer term stuff. Now time passes 2015, 20, and all of a sudden you get these things called weeklies in 0 day. How did your trading kind of take me through where you were when you started navigation to how your trading evolved till today? I mean, I
Yeah,
mean,
I
I find
know.
that fascinating that because that's what it is. It's an evolving, and I'm not doing the same type of things or the same way years ago. How did that evolution from that to the present day?
Yeah, so
I know that's
obviously
quite a few years.
the everyday option started in May of 2022. I don't remember the dates of the other transitions from weeklies to then Monday, Wednesday, Friday, but
Yeah,
so I never did anything with zero DTE when it was just weekly expirations. I dabbled in it whenever it transitioned to Monday, Wednesday, Friday expirations for SPX. I started dabbling with zero DTE, but I never could figure out anything consistent. And then in May of 2022, everyday everyday expirations became available. And then shortly after that, Option Omega came around. And I fell into Option Omega because one of our members in our community posted a screenshot of a back test that they did using this
yeah,
software called Option Omega. So I said, huh, what is this Option Omega? And so I
yeah.
I checked it out, and I reached out to I can't remember. I think it was Matt initially, and then he directed me to Troy,
Yeah.
and we had a conversation. And Troy was familiar with navigation trading. He had previously been a member,
Oh,
and so
great.
he was excited to talk to me, and I was
Yeah.
excited to talk to him. And so, we just started talking, and then I got the software, and I started doing some back testing. I started kind of dabbling in the Option Omega Discord on the weekends when I had some time, and just kind of going through. And I was like, and so I started figuring some things out, and then so pretty immediately I added some zero DTE stuff into what I was doing. And it was primarily just, I mean, I was doing shorter term calendars now with the everyday expirations, and I was doing some zero DTE iron condors. But I just kind of added that on to what I was doing with my longer
Sure.
duration
Yeah.
stuff. And then the more and more, just the longer these zero DTE options were around, and my progression, I just started doing more and more of that and less of the longer duration stuff
Sure.
until this year. And really what happened was, like, I think it was January and February this year, I took some pretty decent losses on some overnight calendar spreads and some other overnight positions because of all the tariff and the
Oh,
headline
yeah.
risk that was going on.
Oh, yeah.
And so I was just like, you know what? Until this settles down, I'm just going to focus on intraday trading. And that includes zero DTE, calendar, delta neutral stuff, as well as I do some directional day trading on individual stocks using options. But that's how it kind of transitioned this year. And then I started getting to the point where I'm like, man, I really, really enjoy waking up every day and not worrying about what my overnight positions might be doing. I started
Oh,
getting
yeah.
used to this idea that, I mean, you know, Trump had Liberation Day. It was very liberating to not have this overnight risk. And so, really,
Absolutely.
since April of this year of 2025, I've had only a handful of overnight positions. I've really just been all intraday, and I've just been kind of liking it a lot. And so I think I'm just gonna
Yeah.
stick with it for the most part.
Well, yeah, and you bring up a great point because that's always been the biggest selling point of zero day is that no overnight risk, which is wonderful, right? And at the end of the day, it's, you're done, right? It's like in the trading pit, the equivalent was most people were scalpers. A lot of people didn't even understand options, but they were just scalping. I want to buy it at two, sell it at two and a quarter, and go home at the end of the day. If I could make 500 bucks or whatever the number, they're happy. But in actuality, because as a market maker, you have to trade a lot of different things. You always went home with inventory. But most traders, if you said, would you rather go home with nothing overnight? They'd say, absolutely. Who in their right mind wouldn't? And so the last 4 or 5 months, you've had kind of a Steve Liberation Day, right? Where
Yes,
you've been doing, you want to, so you're not at this point in the parking garage is a lot of your longer term trades, right? And what before we get into maybe how you're looking at trading now, maybe could you give a couple minutes on if we look at before April and going back a couple years, what would a typical week of trades look like for you before before you went 100% into the zero day? What would, like, did you have some, okay, I did some 0 days, some 2 to 7 days, some 15 days, some kind of give an idea of what that scope looked like. So we'll do a before and after. What did it look
sure.
like before?
Yeah, I was doing a lot of premium selling, so I was doing some just naked strangles,
Okay,
and I'd be using usually indices like SPY or IWM, or I would do it on futures because of the lower buying power requirements, like ES or even MES and
yeah,
things like that. And so I'd always have a premium selling. So I would basically just wait for implied volatility spikes. I wouldn't sell it in extreme volatility, but I'd wait for, prices just kind of trucking along, and then you have a dip and you get the little spike. And so the premiums are juiced. So I'd be selling premium that way. And then I'd just be scaling out at, 50% of profit, kind of the tasty trade type way
Sure.
that they do it.
What
So
duration on those?
uh, I was doing longer duration. I think they like 45 days is kind of their
Oh,
sweet
I got
spot, but I was doing a lot of 60 to 90 day.
you. Hmm.
I liked the, you get wider, you get more premium, and you still get some really good premium decay. And so, but I would do it anywhere in between kind of 30 and 90 days,
Okay.
depending on, I'd look at the different options and figure out which one I like best. But
Yeah.
so that was kind of the duration on those. So I'd always have a portfolio of a handful of just straight premium selling like that. I would have typically several positions on with some type of butterfly spread, usually some type of broken wing butterfly where I had no risk in one direction, very wide butterflies, and again, longer duration.
Yeah.
Sometimes, 30, 60 days. And then, that gradually started getting down lower too, where I was doing 7 day, 14 day, kind of
Yeah.
lower duration there. But just kind of building a portfolio of those types of trades. I have a strategy that I call the iron duck, which is basically just
I
a
heard of
broke.
that. What is it? Yeah. Yeah.
It's just a broken wing, skewed iron condor where you have no
Yeah.
risk to one side. So I was, kind of adding those in on volatility spikes.
Yeah.
I was doing, let's see, what else was I doing? Let me just scroll through my Discord channels and I can kind of,
Any long Vega
not a whole lot.
calendars? And so
Mm-mm.
you're doing more from the short Vega.
Yep.
Okay.
Oh, and then calendar spreads, a lot of double calendars,
Double
uh,
calendars,
double
shorter
calendars.
duration, like under 10 days or
Well, I was doing initially I was doing longer, kind of 30 to 60, and then again, those just moved so slow that I eventually started really scaling down, and then once I came across option omega, of course, I was doing, 1.2s and 3.4s and all
yeah.
those. But
Yeah.
yeah, so it's been kind of a progression where it started out longer and the duration just kept getting shorter and shorter and shorter until same day.
Oh yeah. That is interesting, isn't it? That you go from, I mean, because yeah, similar where, I'm used to more 30 and 60, but the duration keeps getting closer. And farther out is more almost a volatility play because you're making decisions based on volatility. Closer in is a different, how is your mind, is you're going from basically longer duration to closer? Was it what's going on in your mind? Was it like from emotionally, or was it a natural progression, or is it something more personally you like, or you just saw that, wait a second, you
Well,
can make
first of
the
all,
money?
it was a learning curve,
Oh
right?
yeah,
When you, when you're selling premium 90 days in duration, price can really move around and it's barely going to move the needle on your
right.
P&L swings. So you have to get used to the P&L swings. And that's why I think it was probably a good thing that I gradually started going shorter and shorter
Right.
duration because I could gradually get used to the P&L swings on the different durations. Whereas if you go from 90-day duration to 0 DTE, that's going to be a
Oh,
big shocker.
it's insane. Yeah, I
Yeah.
couldn't even imagine. And so now, since, what would you say, you said since April, you've gone more. Give me a picture of what that looks like direct. I mean, what I found fascinating, I talked to Steve for a couple minutes, and I'm a guy who, you know, if you say to me Fibonacci, Gubonacci, Elliott, all these different things, I've tried to get better at charts and stuff. I'm still very, very bad, but I'm thankful there's people, that I know and I'll talk to, and they'll give me some guidelines and stuff like that. But what I was fascinated, Steve, what stood in my mind was you gave me hope that you're just looking at the price. You're looking at something that I can look at, right? Dan, did you see what it did yesterday? Right? Correct me if, I mean, obviously you understand those things, but just maybe give an idea of your view on kind of how you're trading now and how you do technical. It's not like you have, right? You're not like Mr. Technical, right? You're not, I mean, you understand it well, but you try to simplify things. Why don't you maybe touch on
Yeah.
that?
So let me kind of put a couple things in a different couple categories. So
Yeah.
like my zero DTE delta neutral type stuff, I'm really not, well, a couple things. One, a lot of that is just back test driven.
Yes.
So that's following the back test. And I have some automation set up with Option Omega's, automated system. And so that kind of takes care of that, which is great because that kind of releases a ton of mental capital because I don't really have to think about it. I'll hear my platform chime when I get filled. I can check, make sure everything's good to go, and then I can kind of forget about it, put it out of my mind. It's always right there, but it's a little bit more out of my mind. It frees up mental capital. And then I do a little bit of discretionary premium selling. So I'll wait for price to kind of calm down and look for what I anticipate might be consolidation, and I might sell premium that way as well. So that's kind of the delta neutral side of it. The other focus that I've really had a lot this year is on some directional trading. And I used to always say I sell premium because I'm not good at trading directionally. I mean, that was
Mm,
always kind of my thing, and
yeah.
that's changed this year. In fact, the category of strategies that has produced the most profits for me this year has been directional day trading.
Mm,
And really what it comes down to is, people complicate this so much. And this goes to your initial question. They're if you look at people's charts, they've got 18 indicators on there, and it's all kinds of lines and squiggly things and things that just to me would just be noise. And I
yeah.
think they are noise. And I think that's why 90% of traders fail, is because they're trying to go about it the wrong way. My charts are very clean. In fact, I've removed the color from the candles. So my candles are white and gray on a black
Wow.
background. So I've
Yeah.
literally removed everything. And the only thing that I have on there are levels. And the levels that I look at, and what I always tell my community is a level is a level is a level. There's no level that's better than another level. Okay.
Yeah.
And people argue with me about this, but I will argue it till the day that I die. The day that I die, that your support and resistance zone is no better than his 618 Fibonacci. It's no better than his VWAP. It's no better than his 34 exponential moving average. It's no
Yeah.
better than his trend line. They're all the same.
Yeah.
They're
Mm,
all the same. The only thing that matters is how you manage risk around that level.
mm,
And when my profitability on directional trading exploded this year, that's what finally clicked. And Dan, you know, I mentioned I've been trading since 1999.
yeah.
It's taken me 25 years for this to finally click.
That's
But
okay. But you know what? I mean, you stuck with it. I mean, for me, when you're teaching, for me, it's just encouraging. I've really said this. I said it's encouraging people, keep them in the game long enough so that they kind of find their rhythm. They'll get better at it. And obviously, you stayed in it that long because you had a huge passion. Obviously, that's something you wanted to do. But continue on. You were going on the whole technical thing. So you make your levels. You called them,
yeah,
right?
I call them key levels, and like I said, I don't think any level is better than any other level. So and don't get me wrong, I'm not against people using VWAP or Fibonacci or an indicator. The problem is that most traders use it the wrong way. They
Mm,
use it because they think that it has some predictive nature, and it doesn't. The only thing it's good for is giving you a level or an indication or something to enter on so that you can manage risk around that. And
mm,
the only way that you're going to be successful using that indicator or level is if you are a good risk manager around that level. And so my preference is the levels that I use is simply I just always mark the previous day's high, low, and close.
yeah,
So I have the range of the previous day. I've got where it closed, and then sometimes I'll draw trend lines. Like if there's a kind of a flaggy pattern or a wedgie type pattern, I'll
yeah,
draw little trend lines. But again, and I'm waiting for price to either break out or or test that level. And it just gives me a level to manage risk around so that,
That's a great thing.
I think way too many traders are focused on what they call a setup,
Mhm.
whatever that might be. They're
Yeah.
focused on a setup. Whereas the real shift for me came when I didn't focus as much on the setup. I just focused on managing risk around a level.
So even if you're wrong or right, what I'm hearing is even if you're wrong or right, because there's a level there, right? If it goes your way, you're fine. But if it goes against you, you recognize the level and you're ready to do something. Is that when you
yeah,
say
yeah,
when
it
you
just
say
helps.
manage it around the level? What is that?
Yeah,
Maybe
it helps me manage risk around the level. So let's say I get long on a stock that's trading at $170 and
yeah.
170 is my level. I get long at 170. Well, if it goes against me, then I'm going, that's my kind of my line in the sand. So I'm going to cut that trade short if it goes against my level, if it goes below my level. Now, so the whole rule of directional trading is cut your losses short, let your winners run, right? Well, that's exactly what this is. It goes against my level, I cut it, I take a small loss. If it goes in my direction, sometimes it can be a massive winner. And so that's all it is. That it's really that simple in my
Yeah.
mind.
Steve, you said something interesting again when I was getting to know you through Troy. Something that stuck with me and made a lot of sense. I never looked at it this way, but you were talking about, again, Steve's in 0 day. He's in and out the same day. But you mentioned in terms of sizing, you started talking about, okay, I might get long. I can buy a 0 day, but sometimes you might buy even though you're going to get out at the end of the day, you might buy a 1 or 2 day. And if I heard it correctly, something like if it's a 2 day, maybe I would buy more or less because there's a different risk. Or did I trigger what you were? Say it
Yeah, I know
better
exactly
so I
what you're
didn't
saying.
butcher it too bad. Go ahead.
Yeah, no, I know exactly what you're saying. So what you're referring to that I talked about is, if so a lot of my directional trading using options is on individual stocks. So those individual stocks only expire on Fridays,
Right.
right? So if I'm trading on Friday, I have the option to I always trade the nearest expiration. So if I'm trading on Friday, I have the option to trade 0 DTE or 7 DTE.
That's right.
Okay. So as you know, if I'm buying a call, that option is going to move much differently on a 0 DTE than it is on a 7 DTE, right? It's going to move a lot quicker. If it goes in my favor, I'm going to make profits a lot quicker on a 0 DTE. If it moves against me, I'm going to lose a lot quicker on a 0 DTE than I would a 7 DTE. So I think some people make the mistake of no matter what the days to expiration is, they just use either the same amount of buying power or the same, there's different ways to do it. But what I've found is good for me is depending on the duration that I'm trading. So let's say I'm trading a 0 DTE option and the max, I always focus on what's my max risk that I'm willing to take on this trade. What am I willing to risk to see if I'm right on this trade? What am I willing to risk to see if this 50-50 level that I'm trading around is, what am I willing to risk to see if I'm right about this?
Yeah.
And so let's say I'm willing to risk $1,000 on a trade.
Yeah.
Well, if I'm trading a 0 DTE option, I'm going to only use $1,000 in buying power. Because if that thing moves against me quickly, it could be,
That's right.
down 50%, 70%, 80%
Easy.
like that.
Yeah.
And so if I'm trading 0 DTE and my max risk is $1,000, I'm only going to use $1,000 in buying power. So
Okay.
however many options I can buy for $1,000, that's what I would do.
I got you.
If I'm trading a 7 DTE option, those move much slower. So if my max risk is still that same $1,000, but I'm trading 7 DTE now, I might buy $4,000 worth of that.
Gotcha.
Because if it makes a quick, significant move against me, I could be down 25%
That's right.
of 4,000, which is $1,000 risk, right?
Right.
Uh, and of course it could, different things could happen. I could certainly lose the full 4,000. So I'm well aware of that. But just as my kind of my managing risk, if this goes against me, I don't want to lose more than $1,000 on a 7 DTE. I would buy $4,000 worth.
But on that in that example, would you still try to get out at the end of the day on the 7 day?
Oh yeah. Yeah. I'm not holding those overnight
So,
typically.
okay, so you'll buy a 7 day on, but you're getting out of it, even though it's not a 0 day, you're getting out of everything at the end of the day.
Correct. Yes.
Yeah, I think that's such an important point, Steve, on the sizing that you're right. I mean, it's just like that's why people historically, you know, if you said, what size would you do on a 40-day iron condor versus a 0 day? Dramatically different. The risk
Yes.
is different. And
Yes.
so I think that's a great point. Steve, if you could talk a second on, you brought up something. How do you weigh this, you know, like you mentioned on the iron condor 0 day? And that was a wonderful point. The emotional capital. I mean, if I had to manage 0 day iron condors, at the end of the day, I'd have an hour and a half nap every day. I would emotionally, I would be spent. But having those automated, how do you kind of weigh this back and forth between discretionary and automated? What would be more, hey, I want to trust the back test 0 day? Would it have to do with risk? Would it have to do, maybe give me a little thought on discretionary versus automation in your life and in your life, in your trading or something?
Yeah. So I have several accounts that I trade. And so for example, I have one account that I only trade one strategy in,
Hmm,
and it trades every single day, and it's 100% automated. Um, and I just let it do its thing for the most part.
yeah.
There are always factors, if Jerome Powell is speaking in front of
Oh, yeah.
Congress or, I may intervene, little things like that. But
Yeah.
for the most part, that is nearly 100% mechanical. And
Okay.
so I open that in the morning and I just let it do its thing.
Yeah.
So that's just kind of, it's in the background. I'll check it from time to time throughout the day, but there's very little mental capital being used on that
Yeah.
strategy in that account. I have another account that I do all my directional day trading in. Of course, that's 100% laser focused. If I'm in a position, I'm watching it for the
Yeah.
most part. So that takes a lot of mental capital.
That's
Then there
discretionary. Yeah.
discretionary,
Yeah.
and then and that could be that's directional trading as well as um, discretionary delta neutral trading. Now, the way I the way I've kind of gravitated with that, because that is from a psychological standpoint, that is very difficult. In other words, if I'm in a directional trade, let's say I'm short, I want that thing to go down, right?
Right.
If I have puts, if I'm long puts, I want that thing to go down. It's really hard mentally to compartmentalize. Okay, that's that trade, but over here I'm going to sell premium, and I just want price to stay in the range.
Right.
Even
Right.
if I'm short Tesla and I'm selling delta neutral premium on SPX,
Yeah.
there's a lot of correlation, right?
Oh,
So
yeah. Oh, yeah.
that's very difficult. And so I've kind of I was trying to do a lot of both at one point, and I've just kind of realized over time that I don't need to be trading everything at all times. That's an issue I've had to work on myself.
Yeah.
but
Sure.
but then the other thing is it's much better for me mentally if I'm either in directional trading mode
Yeah.
or delta neutral mode. And so, like today, the market is there's not a lot of consolidation. There's not a lot of, little pockets of just trading sideways. I mean, this thing started off going up. Now it's been coming pretty straight down here for the last while. There's a
Yeah.
little pause. But, this is not a day that I'm going to focus on delta neutral
That's right. zero
unless
day.
things settle down. I mean,
Yeah.
this is a day that my focus is on directional trading. And so I'll just put, the vast majority of my trading in this. Yesterday was the opposite, right? Yesterday
Right.
had very little range. I mean, the S&P was just chopping
Eighteen.
around
Like,
all day.
I think it
And
had an
so
18-point range yesterday. And you bring up something when you look at it, like you said, okay, now when we look at the SPX on a day like today, we're down 40 points or whatever it is, you have a better feel, right? When do you, you know, market opens at, 8:30 Central, 9:30 Eastern, how long do you give yourself before you kind of, okay, this is the type of day? Do you wait a half hour? Do you wait? What are you looking at? When to, like today we were quiet for a little bit and then it started moving. How do you look at that you've determined, like obviously today you're saying, I'm definitely locked and loaded on directional. How do you look at that? Because people could make the wrong decision. People
Mhm.
could, maybe, hey, we're real quiet, half hour into it, I'm selling premium, and then the thing's cut loose.
Yep.
How do you look? Maybe take us through your thought process a little bit.
Well, I think a part of the important part of that thought process is we absolutely never know in advance, right? We can think we
That's
know. We
that's
can
right.
we can use little clues to help us determine, but we never really know. So, an example is yesterday. I mean, I had some mechanical 0 DTE and 1 DTE premium selling going on right from the start, like right from the opening bell. That's just part of a back tested strategy that I do, and so those obviously were doing really really well. I was waiting for a potential, for price to just break out of the range a little bit and then maybe start consolidating again. So I didn't continue to add selling premium in there, which obviously if I would have in hindsight would have been
Yeah,
the right
absolutely.
move, but we don't know that in advance. So you never really know. So that's one thing. I had some, so you know, I wasn't missing out. I didn't feel like I was missing out. Didn't capitalize as much as I wish I would have, but that's
Yeah,
every trader, right? We always wish we would have done more on winning trades.
sure.
So that's that. The other thing I look at is to start the day. I look at what kind of news reports are going on, not only today but this week. We've got Jackson Hole starting later this week. Powell's going to be speaking Friday morning. So my thought is, this week leading up to Jackson Hole, we'll probably just get some kind of two-sided back and forth action, and the market might be kind of waiting for what he says. And so my tendency was to expect more chop, not necessarily big one directional moves. I was right yesterday, I was wrong today. Right.
Sure.
So today, and today, that thought process probably kept me out of some trades. Like, I didn't take any directional day trades this morning for the first hour because I thought we might just kind of chop around or swing back and forth like we did yesterday. And so that bias kind of probably worked against me a little bit today. But all that to say, all you can do is use your better judgment. And that's one reason why I like the levels, going back to the levels that I use. I have the previous day high, the previous day low marked. I'll also go in and mark like the pre-market high, pre-market low in the indices,
Yeah,
QQQ, SPY, or the futures. And so if price is just kind of chopping around between those levels, I'm more hesitant to take any directional trades because they're going to tend to chop around as well.
yeah,
Whereas if, like today, once price started breaking out of those levels,
right.
then that kind of gave me an indication, okay, we might be in a more of a trendy type day as opposed to a choppy day. So all those little clues, and a lot of it just comes from, screen time over the years, just kind of watching price action. But the real answer is we never know in advance, and we just have to. That's why it's so important to use those levels to manage risk around, because we never
Yeah.
know in advance.
Let me add a couple more, just a couple more questions, and I'll let you go. I'm just, for me, it's tough to stay in a time thing because I could ask you 50 more questions. I'm fascinated by it, all of this, but like, take a day like today. We're in a range. We break out of the range to the downside.
Mhm.
Are you more on your trades? Okay, now you know what kind of, okay, we're breaking out. Let's see where it goes. Are you, hey, when we're breaking out, are you more, do you find yourself going with it or wait till it kind of runs where it's going to go and then fade it? Do you find more? I don't know if that's a good question. I'm not any good at
More of a trend trader versus a
yeah,
contrarian.
well,
Is that
yeah. Do
kind
you
of
find yourself on more of your 0 day trades the last 4 or 5 months where you find, okay, it looks like it's moving outside the range. I'm going with it. Or will you let it kind of go to the neighborhood it's going to go? And then look for a little pullback? Or I mean, obviously it depends. But I'm just saying, what do you?
I do a little of both, but I would say for the most part, if like today, once we broke out to the, below yesterday's low, I was looking for stocks that had a relative weakness
Hmm.
versus the S&P or NASDAQ, and I was looking for short opportunities.
Now that's an interest. So you're looking in the stocks that, so you're putting another piece, the stocks that have been looking weak like over the last few days, or
Really just today.
oh, today that's weaker like percentage wise, and you'll kind of jump on those for the downside a little bit.
Yes,
See, that's
for the most part.
I appreciate that because it's something, you know, you could explain to the mailman on the street. I mean, it's something, it's not esoteric, right? It's you can understand. One last thing I find fascinating until I met Troy in the Options Omega community, something called the Power Hour, right? And I just find it fascinating, this whole Power Hour, the last hour, right? I'm overly sometimes too cautious, and the Power Hour is that last hour and things move. Why don't, if you could talk a minute or two, or whatever it takes on the Power Hour, and I know you do a session at the end of the day on, am I correct, on the Power Hour. Tell us about that. It sounds like a fun. What, describe the Power Hour? What do you do in the Power Hour? And I mean, that sounds like a very laser focused experience at the end of the day.
Yeah, it's
And
a lot of fun. We actually stream live with our community for the first hour of the day and then also the last hour for Power
okay,
Hour. And so Power Hour, typically the way we started out is we're just talking about any trades or current positions that we've done throughout the day. So I'm just kind of recapping that to my community. And then we'll just kind of sit there and watch, the positions that we have on. And a lot of folks are kind of doing similar things.
yeah,
And so we're watching that. We're recapping what's going on the next day, what kind of economic reports are the next day, are there any earnings that night? So just a kind of a wind down of the day and make sure we do a recap of what we've done and what we see coming. So that's part of it. And then just really just kind of watching our positions and if it's we have some positions that we like to take to the bell, and they
mm,
we just let them expire in SPX because they cash settle. And so it can get a little bit intense in those last few minutes. You got the market on close data that comes out 10 minutes before the bell, and if that's a
oh
big
yeah,
number, sometimes that can move the market. And so I usually have my risk graph of my position up on the screen, and we're watching price bounce around in it, and so everybody's kind of rooting, come on, we want 64.50. So it just becomes kind of a fun little end of day community
oh yeah,
camaraderie. A lot of us are a lot of times looking for the same expiration, and then you get a few outliers who are looking for something else, and so they're rooting against us. So
too
it
funny.
becomes a
Now, are
little bit
you
of a.
initiating trades in the Power Hour? Is it more just writing your stuff into the sunset, into the end of the day? How much is more managing what you have on that day and watching it to a safe conclusion? And how much are you dipping your toes in the last 15, 20 minutes with trades?
So good question. We actually started streaming Power Hour because we had very specific strategies that we were actually entering in the last hour, and
Okay.
then we were watching those play out through the end of the bell. And there for a while, and we're talking like 2022, 2023. I mean, if you look at a back test of selling premium, that 2022 and 2023 were just crazy. I mean, you could sell zero DTE premium and know nothing and make money.
Balls were
And
higher, yeah, 22.
yeah, vols were higher, things were not quite priced right, I don't think. And so it was a lot different. And so we had these strategies, and we were making a lot of money.
Yeah.
And we were just,
Yeah.
and so it was so much fun that's how the whole Power Hour thing started. Then of course things changed, and they started not being as profitable, and we started looking at different things. And so now today it's more just kind of positions that we already had on, just kind of riding those into the bell.
Sure.
So not a lot of new
Yeah.
entries during power hour, but there are times where, especially if, like after the tariff stuff was going on and volatility just got pumped through the roof, right? The VIX was in the
Yeah.
30s and 40s and beyond. Um, there's so much premium left at the end of the day that
That's right.
sometimes you can get away with that. And so when that was going on, we were definitely initiating some positions in that last hour. But like with, VIX 15 or 14 in the 14s right now, there's just almost no premium left at that point. And so typically not doing anything. I do have one strategy that I will do if I have the strikes available. In other words, if I have other positions on that are taking up the strikes and I have overlap, I won't do it. But we do have a strategy that I call the Magic Mahomes.
Oh,
Keep in mind,
I heard about that. Yeah, you're in Kansas
Dan, I'm
City.
from Kansas City
That's
and
right.
I get to name my trades whatever I want.
Why not? Why not? Yeah, that's funny.
So,
Yeah.
so it's something that we do in the last 15 minutes.
Yeah.
Mahomes is number 15. So that's where that came from.
Okay. I like it.
And sometimes you'll be losing on the trade until the last like 2 minutes, which is like Mahomes, right? He can be losing and then he just
Oh,
pulls one out in
absolutely.
the last 2 minutes. So
Yeah.
that's where the name came from. But so it's called the Magic Mahomes, and it's essentially selling a butterfly, selling a
Okay.
5 wide butterfly. And then there's some other uh, doing a vertical against it to transform it and take away the risk. And I
Yeah.
won't get into all the details, but it's done. It's always done in the last 15 minutes of the day. And so that's kind of an exciting trade that from time to time we'll do during power hour as well.
Now, if you're selling a butterfly, usually I buy, call, or put, if you're selling it, so you're getting a high, so you have very little risk in the thing, right?
So
So
the
I'm
risk
thinking,
is the debit that you paid.
oh, you're selling it
Or
or,
excuse me, I'm selling it. So the risk. So let's say I sell it for $2.
oh,
My
right.
risk
The
my
five
risk
wide.
is going to be $3.
Right. Okay. Yes. So it's really, it's not a, it's a good risk reward generally, right?
Yes.
And
If price moves 5 points away from your strike, you win. Actually, if
yeah,
price moves 3 points or more away from your strike, three
yeah,
points is break even. If I sell it for $2, if price moves at least 3 points away,
right.
that's break even, and
Yeah.
5 points is max profit.
Boy, see, that would be one that, you're doing a couple streaming sessions a day, that would definitely be if you want to get the crowd going at the last, what do you put it on, like the last half hour or last 20 minutes?
Well, so I'm always trying to get a $2 credit. So
Okay.
a lot of times that doesn't come until the last 5 minutes.
Oh my God. So people for that 5 minutes,
Oh
I mean,
yeah,
it's as good as a sporting event. It's
it's
as good as
intense. Yeah, yeah.
that's funny. I like that. I could get, yeah, those are, if there's any 5 minutes that will bond everybody together, you're all rooting for the same. That is funny.
Well, and if you sell a one lot in SPX, your max risk is $300.
Yeah.
So you can get really small, and it can, so it doesn't have to be some big position or anything like
Yeah. So
that.
nobody's like losing 5 days of trades or anything like that.
Right.
Yeah. No, I think that's fun and it's unifying and it's uh that's funny. Well, Steve, I appreciate, oh, one last thing I was thinking about this. I think one of the things that really I think has stood out with me today from talking with you, this concept of emotional capital. And one of the reasons I've switched over, being an old dog doing one way for so long, but I look at, I feel liberated using some back testing or automated back testing because even if you lose, I'm not watching it, right? And the emotional capital that I would put, I think of all the hours over the years, Steve, I've watched the market and I'm watching my wife be like, what are you doing? I'm watching this trade. So I'd spend hours watching a trade. What the heck am I watching a trade for? And really what it is I'm rooting, right? Come on. Let's
Yeah.
see if the market, I mean, what a horrible investment of time. So I think this concept, and that's a good challenge to me, of this emotional capital, that you're not exhausted at the end of the day, right? I mean, because you've kind of, the high emotional, you're getting enough emotional capital on the day trading, right? That's where you
Right.
spend, would you say that's where you spend the most emotional capital is with the
100%.
with those trades? So if you were to overburden it, things wouldn't be so much fun, right?
Right.
So I think that's a great thing. Well, Steve, thanks so much. This was a pleasure for me, and I
Yeah, and
appreciate.
just to real quick, just to kind of build on that,
Yeah,
I have sometimes I have to pull myself away from my screens. Like, I don't, like I said, I've gotten better about not, I don't need to always have a position on. So
that's
I've got
great.
my bots running and stuff like that, and that's great. But like for trades that I have to be laser focused on, I've really been working on not, I don't have to always have one of those positions on. So I've kind of made it a point to get away from my screens, go for a walk, go do something for a couple hours, kind of middle of the day. Like right now, after we get off here, I'm just gonna go outside, take a walk and get
Yeah.
away from the screens. And that's been a big lift on just the whole, when I do that, I don't feel drained at the end of the day. If I
That's a good.
find myself in positions that I have to focus on all day, I'm exhausted at the end of the day. And it's not a good feeling.
That's a good. Yeah, I do. I do about 3 walks a day,
Yeah.
and I break it up, and you feel so much better. Now, what do you? Let me ask you. What? See, now you get me. One more question. I'm thinking. Okay, you do in the morning. You do a session, and you put some trade on. You're getting long NVIDIA or whatever. You go walking. While you're walking, do you have a stop order in or some type of if it goes against you? Or how do you handle that when you go walk? Yeah, how do you
Well,
address that?
I typically don't have a position on like that. I typically need to be in front of my screen if I have one of those positions on.
Oh, I guess so. It's more so.
I may be in a day trade for 20 minutes.
Oh, okay. So you're not most of the day trades maybe aren't 5 hour trades.
I hope not.
Oh yeah, you
If
I
they
hope
are, and some of them end up being that, but that's, because they're not moving, maybe they keep chopping. They're not going against me, but they're not going in my favor.
right.
So, I can get stuck in some of those, and sometimes I'll just cut them and leave anyway. And then every once in a while, like if I hit a couple of profit targets and I've just got a little runner left, a smaller position, I'll monitor that on my phone as I leave. But if I have a full, directional position on them, usually pretty laser focused at my screen on those.
Okay. Are your automated trades, they're not all done by the end of the day, right? You might have a little, maybe a 3 day trade on or something. Is that right? For automated trades?
Typically, no.
Oh, so
No,
even your automated trades, they're all 0 day.
yes.
So you're not doing like maybe a double calendar 4 days out, or you've that's even switched in
Yeah,
your.
that kind of switched in April. I used to do a lot of calendars entering on Friday and would hold over the weekend and throughout the week, and I've kind of got away from even that
Okay.
duration.
Well, I like that, and do you, one last one. This is the fourth time I've said one last one, but I know we need that. But when you get, I always think it's important to evaluate your trading, evaluate your personality and what works. Um, it sounds like you do that as well as anybody, that you're willing to switch, right? From the April thing. I mean, you've made a complete switch, right? I mean, from where you were, uh, what would you say to people that are, maybe stuck in a rut that what helped you psychologically that you were willing, it's one thing, and I think part of it you said you went a little slower. You didn't just go from 60-day iron condors to day trading. Is there something in your psychological makeup, or how did you, or did you just like in April you said you're going to pause things a little bit and things just started going good, right? Maybe it wasn't as.
Yeah, and part of it, kind of what I've experienced throughout my trading journey is I'll trade a bunch of different strategies, and I'll get to the point where I'm overwhelmed, I'm past my capacity, and then I'll have to scale back. And then I'll
Mm,
get excited and start trading a bunch of different things again, and then I'll have to scale back. And one thing that I've found really helped me was um, just putting together a trade plan, and I do it 1 month at a time. And I
mm,
share this with my community. And so at the end of every month, I do a video and I have a spreadsheet and I show you, here's exactly what I'm trading. And this is my plan. And I do it by calendar month. So this is my plan for August. And this is what I'm trading. If I make any changes to what I'm trading, I'll do it at the end of the month. So I
okay.
commit to that strategy. I commit to everything that I'm doing for a month at a time. And then at the end of that month, if I might start testing something mid-month, and then I'll officially add it to my plan at the end of the month if I decide to. So that's the
I
way I
think that's a
kind of
great, I
make
think that's a
changes.
great idea because sometimes people will make plans, and even if something totally isn't working or maybe something has changed, they stick with it too long. And I think that that's one thing I just, I'll just say this from the trading pits. People didn't do that because with the overhead you were paying at the CBOE, you had to make changes or you weren't going to last, right? And you
Right.
have to make some changes. So I like that, a month to month trading plan. Well,
Yeah,
Steve,
it helps me commit too. Like if I am going through a drawdown, I don't just change on a whim because I had a bad day.
yeah.
So it helps me commit that way. And then it also allows me to make tweaks, but I have to wait a month before I do that.
So maybe it's a cooler head because sometimes I see people like if they lose two, three trades in a row, you could just see the emotional drainage. And they're like, that's it. I will never trade an iron condor till I die or whatever. How do you, when you're changing your monthly plans, how do you get it so there's no emotion in it that you're not making like, you have a hole in the roof, you're going to gut the house. How do you, from just going too overboard? Maybe you give it a month, that helps, right?
It definitely helps. And of course, position sizing is everything. So
That's that's it. So, all right, Steve, thank you so much. This was wonderful. Thanks for taking time with us.
Dan,
And
I enjoyed it. We'll have to do it again.
yes, this was good stuff. All right. Thanks, Steve.
Okay. Take
Thanks.
care, Dan.